it seems like in my experience, there's a whole bunch of people that have had zero or not zero. Well, maybe I guess we could say like zero properties talk about it a lot, and then 1 and 2 properties and never really get above that threshold. There's a ton of those people, but then there's a smaller circle of people that get above that, and it seems like they grow fast. Like they don't stay
Mhm.
around 3 properties. It's like they get to 25 or whatever they get to. And I'm not sure. I have theories on what the differences are between those two types of people, but I'm curious of your thoughts. Like what's the difference there?
Well, I think there's a lot of differences. So we could probably have this conversation. We could probably talk for hours about this, but I think that the two main things that I see are people who scale their wealth and their portfolios quickly or to a very large extent understand how to use leverage to their benefit and are comfortable doing so. What I mean is you buy one property, you rehab it, you force appreciation, you immediately cash out, refinance, you use the funds to buy the second property, and you keep renting and repeating as fast as you can. Those people, especially over the past decade, have scaled multi-million, tens of million-dollar portfolios simply because of the way that they used leverage. I would say that the other kind of key aspect here from my perspective of who grows large portfolios, we work with a lot of individuals that make a lot of money. I think our typical client's going to make like $600,000-$700,000, and then we work with people that are making 7 figures and 8 figures as well. The people that scale portfolios to a significant extent are making good income, and they're laser focused on rolling that income into real estate and scaling it out. And in their main income stream is typically scalable. So not only are they scaling a real estate portfolio, but they're scaling their main income stream at the same time. And they're just doing that year over year over year. And it might take them 20 years to build a large portfolio, but they don't give up along the way and they keep doing it. And so if you think about that, if you're I don't know, a physician and you are making $600,000 being a physician, and maybe over a 5-year period that goes to $700,000, I would say, okay, that income's not scaling as fast as we would probably like, but you might along the way have opportunities to invest in things like surgical centers, office practices, and things like that. And that might give you the boost of one, two, 300, $400,000. And then the question just becomes, what are you doing with that? Are you going to go and buy your Ferrari? Are you going to go buy a boat? Or are you going to buy rental properties? Because I guarantee you, if you can defer gratification for a span of a decade and you keep rolling hundreds of thousands of dollars into rental properties, you will have a much larger nest egg at the end. And I guess I shouldn't say guarantee because nobody can guarantee anything, but that's what I've seen over the past decade. And, the past decade's been maybe an anomaly in the market. It's been a big run up. But man, if you were doing what I was just talking about, you would have a multi-million dollar portfolio at this point.
Yeah, lots of appreciation, low interest rates, leverage was good. And who knows what the future holds. I mean, interest rates have gone up lately but real estate still seems to be doing okay. And
It's going to get harder because the low interest rates cover for people's mistakes and ignorance. So when you have higher interest rates, there's more on the line. Like you've got to figure out how to force that appreciation. You've got to figure out how to get that cash flow rolling. It's not as easy as just throwing money down, buying a property, and just across the board raising everybody's rent $100 a month. It doesn't work like that anymore, or that won't get you to where you need to be in today's market. So what we're seeing is our clients that are amazing operators are still finding big success. And our clients that were the kind of mediocre operators, sort of just an operator could just be an individual buying real estate, or it could be somebody running a syndication or fund. They're the ones that are struggling to continue to add value for their investors.
yeah, I think another struggle for physicians is the time. A lot of physicians have pretty demanding jobs and they don't have, I mean, if you're already working 60 hours a week in your job, real estate as a side gig is going to be difficult because you're going to come home and usually, you got kids and family and everything, and you come home and you're like, oh, and I got to go, whatever, do the VRBO, or the tenant's got the request, or blah, blah, blah. And, the headaches on top of the 60-hour-a-week job is unpleasant. So I
Yeah.
think it's not even unpleasant. It's like unbearable.
Yeah.
um,
Well, I get it, man.
when you say yes to one thing, my philosophy is you got to say, when you say yes to one thing, you got to say no to the other things.
Yes.
You can't just keep stacking stuff on top of
Yes.
things.
Yes.
You got to have
Yes.
a plan for like, oh, I'm going to say yes to this real estate thing. So I'm going to say, well, what am I going to say no to, or how am I going
Yeah.
to shift down?
I think it's hard, especially for physicians, because you're right. You are working a lot, but you're also making a lot of money. And what happens is you look at, okay, I could buy this single family rental and do this whole real estate investing idea. It's going to cash flow $500 a month. Like that's not going to be life changing for me. So this just is not worth my time. And I think a lot of people get stuck with that mentality and they just never start as a result. But for me, I'm like, okay, but you buy one, guess what's going to happen? You're going to get the bug. You're going to want to buy a second one. Then you're going to buy a third. Then you're going to want to buy 10. Then you're going to want to double that and buy 20. All of a sudden, you've got $10,000 of cash flow coming in every single month. This might take you, 6-7 years to actually get to, but still, you've got $10,000 of cash flow coming in every single month. It's all tax deferred. You've built equity through your portfolio, through appreciation and debt pay downs. Now you can start refinancing everything and using that to buy even more property and accelerate the process. The thing that we have to get in our minds is that we're starting a snowball and it's going to roll downhill and it's going to become a massive snowball as long as the hill's big enough, right? But it's going to be really slow at first, and that's okay. But as long as you believe in the process and you believe in the end result, you can keep grinding and keep pushing.
It's not an overnight thing. It's not a get rich quick thing. I mean, it's a long game. Yep. And going in with that mindset is much, much better. You don't have a letdown when you're like, oh, it's been the first year and I'm not rich yet.
Right. Exactly. And you won't be. And you'll probably feel that way too, by the way.
Yeah, the first, it's kind of like the first year's probably the hardest,
But the first year, especially, like you go into your first property and you immediately are stressed out. I remember doing this. I did this twice with one of my first long-term rental and my first short-term rental. Even though I could carry them, even though I was financially sound, you buy it. And the minute you take ownership, you're just immediately stressed because you're just like, okay, the mortgage has started and I have to get this thing rented out right now for top dollar. But like, it's just, it's just you having, but anyway, you keep building and you start realizing there's a pattern to this. There's a game to this. There's an art and a science to this. And as long as I play the long game, I will win over a long period of time. And that's what real estate investing is. There are people that do this full time. And if you follow them on social media and you see their results, you will feel inadequate, but you have to separate yourself from them because they are doing it full time. It'd be like trying to go and trade stocks for 2 hours a day when there's people on Wall Street doing it for 10 hours a day before you get up in the morning and after you go to bed at night, right? It's like those guys are going to win every single day. So don't try to compete with them. Just buy your rentals, build that wealth, and over time, it'll give you exit options. And I know being a physician has been really tough over the past few years. That's what the number one thing all of our physicians say. We always ask everybody, why are you investing in real estate? Our physician clients are saying, because I don't want to be tied to this job. I love helping people. I love saving lives. I love medicine, but I hate the hospital. I hate the practice. I hate the fact that I'm tied to this and I don't have any say over my hours or over how much I have to work, and I want to see my family and my kids grow up and I want to spend more time with them. If that's you, start building opportunities that give you flexibility later. Real estate is one of those opportunities. If it takes you 7 years to build a cash flow stream of $10,000 a month, that still gives you flexibility to either reduce your hours, to find a better work-life balance gig. Like doing this over time will provide you with later in life opportunities to create the work-life balance you're looking for.
Yeah, and I think educating yourself, physicians are great at educating. They've been through a lot of education and they're like the smartest guys in the class. And once you start educating yourself further and like listening to Brandon's podcast, and there's a bazillion, that's the thing, there's a million podcasts on real estate to the point where it's overwhelming. But like listen to Brandon's podcast and look at the guests that you're bringing on and like listen to their podcast. That's typically an approach I would use because you at least are in like a circle of trusted people, but you can educate yourself in that. You'll start to feel more confident in buying your first property after educating yourself quite a bit. And then you learn from experience and then you can kind of build on that is a great approach. It's not for everybody, but it's a heck of a business to build. And it can be that ticket out of, or at least partial ticket out of medicine. And I agree, people are struggling in healthcare. It's a very challenging job and they're looking for a little bit of freedom outside of medicine.